This is a chart of Nifty. I had shared this chart that probably Nifty will reach this level and then there will be a sell off. But now there is already a sell off. I was expecting Nifty to touch 24,350. So probably we may see a gap down tomorrow and that level can be touched. And if we check daily chart of Nifty, then this was a area. This is double bottom. Many people will say this is head and shoulder pattern, and this is a breakdown. So in this black candle, the bulls had to exit because there was a stop loss of longs, and now prices are coming. This is next support area or buying area. But when the trend is down, I don't look at support areas. Many a times or most of the times support areas will get broken, that will be reversed only in the higher time frames. So if we check higher time frame, this is the higher time frame buying area, and if we go for 50% retracement, then at least 22,600 550. I would look for any support below this area on weekly chart. There is extended move, so we may see these levels 22,500. That does not mean that prices will continuously fall down here. There can be a retracement, but it is likely to fall down further. So that is my view on Nifty. On daily chart, the trend is down. Even on 75 minutes, the trend is down. I won't look to buy in this market. Bank Nifty, if we see, there can be retracement, but it will not be a trending move. Bank Nifty is still bullish. So Bank Nifty has not broken the buying areas, and if candle closes below 50,370, then probably it will turn red. Before that, I don't see any reason to go short. 75-minute trend is bearish sideways, so there has been a rapid fall, but it is sideways now, and it is in buying area of daily chart. So if there is change in trend in Bank Nifty, then we may look to buy. On 15-minute trend will change if there is a candle close above 51,690. Before that, it is still bearish on 75-minute and 15-minute. So it is not a one directional trend, one way trend on daily and lower time frames. Daily is still bullish, but lower time frame are bearish for Bank Nifty. Okay. Even on 5 minutes, Bank Nifty was bearish and it is just turning green. If it is turning green, we may see it going up to here, and from there again it may fall. That is exactly the selling area of 15 minutes. So if there is any gap up opening, prices may come up to this area and then again there can be a fall. So whether there will be a gap up or gap down, I don't know. But these are the levels which I can look for. Okay. So it's almost time. If anyone has any questions, they can type their questions in the chat box, or they can raise their hand. It's not going to be a lengthy presentation, it will be a short presentation. Mainly, we have to go to the Chartink website where we'll see how to build the screeners. Okay, so it's 9:30. We'll start the session. So today's purpose is to identify your requirements and create your universe for the stocks. What is the meaning of universe? These are the stocks which you would look for, and from these stocks you will look for new opportunities to either buy or sell. Whatever you want to do, you will have to stick to these stocks. There are 7,000 or more stocks in Nifty, in NSE and BSE. So we cannot go to each and every stock and identify whether this is going to go higher or not. We may have a universe of 100 stocks, and out of that universe there may be 1,000 stocks which are moving much higher and much lower. but we don't need to go and grab all the opportunities. We have to grab the opportunities which are present in our universe. So we have to identify what kind of universe we want. And how can we identify that? We have to understand what we want. Do we want multi-bagger returns? There will be many people who are looking for multi-bagger returns, and basic definition for multi-bagger return will be minimum of 10 times gain as compared to the investment price. So if there is not more than 10 times gain, then I will not call it as a multi-bagger return. Some people may have different definitions. They may say that 2 times is also a multi-bagger, but I would define it as a 10 times or more will be a multi-bagger return. And for these kind of returns, IPO is the gold mine. These are the stocks which have highest risk, but they provide the maximum returns. And by meaning of IPO, I don't mean that whenever there is a listing, we should go and invest in those. Those stocks which have been listed as IPO in last 5 to 7 years. These are the companies which have highest potential to become a multi-bagger, because these are those companies which come up with new ideas, new kind of businesses, new solutions to the problems. And these are, if hit, then they will go on to become a big business. Like Infi, Apple, Microsoft, when these companies were created, these were very small companies. Some of these were started in a garage, and they were not big companies. They were micro caps. Now they are big companies. They are very large cap companies, and now it is not the right time to invest in them for multi-bagger return. So if you want to invest in multi-bagger return, go and identify those companies which are listed in last 5 to 7 years. Mostly these will be small caps, micro caps, SME stocks, and they have very high growth potential. And in these stocks, technical analysis usually does not work. What works is fundamental analysis. People invest based on the scuttlebutt analysis. They invest on uh, the promoters. They invest in the idea. They feel that this idea is going to work, and they invest in that idea. So technical analysis may not work in these kind of stocks, and different kind of mindset is required for this. People have to track the progress of these companies. They have to monitor the growth, and they have to understand the science of expansion, increase market share, increasing profits. There are multiple factors, so we are not going to discuss these things. But how to search these stocks? So these IPO stocks are listed, and these stocks are available on NSE website, BSE website. These websites give which are the companies listed in last few years. There can be a year-wise list. Then there is another website. If you search IPO listing and Chittorgarh, so you will get website. The name is chittorgarh.com, and there you will be able to identify. You will get the list of SME stocks, main board stocks which are listed. There is a list which is a year wise list, and you can get that list which is ready made list. From those stocks you will have to do scuttlebutt and identify your stocks. Then most of the people don't go for these kind of micro cap, small cap. They want to just have a better returns as compared to mutual funds. And next best is those companies which have high risk but high reward. If you are investing yourself, then you should look for at least better returns as compared to mutual funds. Otherwise, there is no point in investing by on your own. So there are different things which involve stock selection, analysis method, and momentum strategies. So if you go for stock selection, mainly the focus should be on small and mid cap. These stocks are they have very high growth potential as compared to large caps, because large caps are already grown up companies. They are very old companies. They have a set of business which is working well, but they have limited potential for penetration, whereas small cap, mid cap, these are newer companies, or these businesses have a bigger prospect. They have better chance of expansion. Smaller things can expand larger if groomed properly. If there is a big tree, it will not grow. But if there is a small rope, it can grow on to become a big tree. It, then there is analysis method. Graham has given a fundamental analysis method to invest in undervalued stocks. So he has given us information that even though you are fundamental investor, the timing is very important. Invest in these stocks when they are undervalued as compared to their intrinsic value. So whenever there is more than 30% discount as compared to intrinsic value, only then invest. That will be appropriate way of getting higher rewards as compared to mutual fund rewards. And then there are momentum strategies where people use high beta, high liquid stocks. So in these stocks, like people like Charlie Munger and Mark Minervini have invested. They don't want to invest at discount. They want to invest at premium, but only when the prices are likely to move faster. So based on these things, you can have your universe. You can define your universe. You can identify small cap and mid cap companies and create universe based on that, or else you can identify the momentum strategy, and based on that you can identify your universe. I will give you one strategy or one screener based on this momentum strategy, where you can identify the stocks which are as per Minervini going to go in up move. They are already in uptrend and they have higher chances of expansion. But you will have to understand the concepts of Minervini, you will have to understand VCP patterns, you will have to understand his entry methods. I can just give you screener where these stocks will get shortlisted, and from that shortlisted names, you can choose which company you want to invest. Screener does not give you ready-made thing to start investing immediately. You have to select out of that. So you can create based on Graham's formula or based on momentum strategies. We'll see how to create a screener based on momentum strategy. Then liquidity circuit limits are big considerations for us, because if the stock is not liquid, then there is no point in investing that kind of stock. If we get stuck, we'll not be able to exit from that stock. And circuit limits, if there are 2% or 5% circuit stocks, then most of the times either will not be able to enter in the stock. If it is going to go higher, will not be able to buy at right time, or if it is going lower and lower, will not be able to exit or stop. So many a times we will get stuck in these kind of stocks. So avoid circuit limit, avoid low liquidity stocks. I will tell you how to create the screener for liquidity, how to identify the stocks which have higher circuits as compared to which we want to avoid. If we want to avoid 5% circuits, I'll tell you how to formula, how to write the formula for that. And then you'll have to monitor the market depth and understand how much is the spread, how much is the traded volume, so that you'll understand how much is liquidity and whether you'll be able to trade in that or not. Then many people are happy with moderate returns. They want balancing the risk and reward. So for these people, there is a ready-made universe of Nifty 500 stocks. They can just stick with these 500 companies, identify these companies, diversify their portfolio. Among these 500 companies, there will be multiple sectors involved there. So they can diversify in different sectors, and regular rebalancing can be done in these 500 stocks. So it is easier for those people who want moderate returns and they want to balance the risk and reward. They don't want to risk too much, but they are happy with lesser reward. So for them, Nifty 500 is a ready-made stock or a ready-made universe which they can choose. Then there are different people who want to go for short term trading. They want to capitalize on volatility. So for these people, the universe will be different. They want high beta stocks. Those kind of stocks which have potential to move 10%, 20% in a day, or maybe 30, 40% in few days, 50% in a week, or 100% in few months. These kind of stocks are different stocks. They are high beta stocks. And then some people want to trade in futures. So there is a limited list of stocks which are available in futures. Even from these stocks, we have to select limited stocks which have very good liquidity where we can buy or we can sell and make money. Timing is the key, and we have to pay close attention to market trends and news. Enter and exit positions quickly to maximize the profits when we are taking trades based on high beta stocks or futures. Risk management is very important, protecting the capital is very important. Those people who are looking for multi-bagger returns, they want to invest in IPOs, and risk level is very high in this. So recommended stop loss can be even 50 to 60% in these kind of stocks. So one can buy at 100 rupees and keep stop loss up to 50 rupees also. If it keeps falling and there is no movement, then they can exit. So there is no limit for losses in these kind of stocks. We have to identify that probably now it is not behaving in the way in which we are expecting and we should exit. So these are very high risk kind of examples. Some people also keep them with 100% risk. So they just buy and forget. They don't look at it even after many years. And some of them go on to become multi-baggers. Many of them disappear. Then there are other stocks which are high beta stocks. They have high risk, and there are bigger fluctuations. So these stocks can give momentums and they can go on to become three times or five times also. But even in these stocks, if there is the risk is high, and we can keep a stop loss of 15% to 30% based on weekly charts. Sometimes it can be also 40%, but usually 15 to 30% is the limit which we should accept in these kind of stocks where we are expecting a return of 100%, 200, 300%. Sometimes they can go up to 10 times also. There can be 1000% gain also. But risk should not increase more than 30%. So I'm telling you these random or some criterias, you can modify them according to you. These are as per my analysis, as per my study. These are just guidelines. You can play with them, increase or reduce them as per your wish. Then moderate risk people who are just sticking to Nifty 500, they can have a medium risk level, and these stocks are slightly more stable as compared to other stocks. So recommended stop loss in these kind of stocks is usually 10 to 15%, and these can be traded on weekly charts or daily charts. But 10 to 15% risk means mostly they are based on daily risks, daily charts. And then there will be short term trading. So in this, risk will be very high, and many a times recommended stop loss comes to around 4 to 10%. If you are taking short term trades, that means you are targeting some moves which can be 10%, 20%, or 40, 50% at the most. In short term, we mostly get swings which come up to 15 to 40%. So if you are targeting 40%, you should not risk more than 10%. Therefore, these are recommended stop losses. So this way, you can manage your risk and protect the capital. So these are the things which we should monitor, which we should look for to identify what kind of universe you want to build. Is there any question in this? Does anyone have any questions? Have you understood about how to select the universe? Okay. Are you able to unmute or it's not allowed? Because I had allowed everyone to unmute. Yes, Hetal sir, you have any question?
So, sir, for a different method, there are different approach. Like for
Yes.
multibagger, to track the fundamental very closely. And
Yes.
what we are at presently learning is trading, where we may
Yes. So we can
ignore,
also invest based on technical analysis, but we
we
are
may,
learning trading, mainly trading. Yes.
we may ignore fundamental.
Yes.
Okay, okay.
We have not discussed fundamentals in details, and I don't follow fundamental analysis, so I can't take any session on that.
Okay.
Any other questions?
Sir,
Yes.
Do you practice means the selection of stocks based on say Mark Minervi or any method of selecting stocks, or it is just Nifty 500 universe and then only technical analysis, the alerts? How do you approach to them?
Yeah, so what I do is I have created some screeners, and these screeners are mostly to identify the stocks which are liquid, which are not in 5% circuit limit. They have good liquidity and good movements. So these are only two things which I want to understand from the screening. And then I have my indicators or the method which we follow. If there is a good accumulation based on Wyckofian principles, I look for that. Or else based on our tape reading tool, I can take trades. So I don't look for Minervini's method. Minervini method is kind of a breakout method based on Wyckofian principles. When there is good accumulation and it goes in breakout phase, after that when it is going in phase D and phase E, he gets involved. So he does not want to involve in the accumulation phase. He wants to get invested, or he wants to buy the stocks only when the phase E starts and rapid momentum is coming.
I mean to say that there is a stress on uh, good gross profit margins and increasing EPS and
Yes, that is Minervini's method.
yeah, that is what I'm telling.
I
That's
don't use that.
okay. So you don't have that universe of stocks with such minerals or fundamental based wait list, watch
Yes,
list.
I don't have any fundamental based wait list because it increases my work.
Okay.
I'll have to spend a lot of time for that. And based on risk reward, based on my methods, I don't feel any need to going into that.
And regarding screening for stocks which are under accumulation, I mean, what's the method of screening? Is it just visual screening or some chart? I mean, screener based.
So normally what happens when there is accumulation? We want a downtrend, right?
Yeah.
Price should be in downtrend. Then we expect this kind of accumulation and spring, right?
Hmm.
So I want to know when price is here.
Hmm.
How can I find it? Most of the times the trading range is from 2 months to 6 months.
Okay.
So if it is from 2 months to 6 months, how many days will be there? There will be around 40 days to 40 days is 2 months,
Hmm.
right? There will be 40 to 45 days of trading,
Yeah.
means 40 to 45 candles. Therefore,
Hmm.
40 days I consider 40 45 days as 2 months. And
Hmm.
if we go for 6 months, it will be around 120 days. How will I create a screener for this? I want the price below low of 120 days.
Hmm.
So if the price of stock is below lowest low of 120 days, then that can be a good stock for me to understand whether it is in accumulation phase or not. It may be possible that it is in downtrend and it is going down and down.
Hmm.
But I will have limited list of stocks which are below 120 days. So
Okay.
I can create this screener very easily, that low, today's low is less than minimum
One.
of 120 days
Yeah, that is.
from yesterday. So this is just one condition which I can add and I will get a big list. Now to reduce the list, what I can do, I can add that this is crossing previous low. It's not just below previous low, it is crossing previous low. So in that what I will add, high is greater than this low and low is lower than this low.
Hmm.
So if candles high is there and low is there, that means it is crossing this level.
Hmm.
EMA 100 can be used for screening. Yes, it can be used easily. Whatever condition you have, you can add it. Suppose this is 100 EMA. You want to know that stock is touching this high, EMA. So low is touching this EMA. What we can do? High is greater than 100 EMA, low is less than 100 EMA. That will give you the condition that price is touched today on this 100 EMA level. If we just keep that low is less than 100 EMA, then multiple stocks which are below this will come. If you keep high is greater than, then multiple stocks which are higher than that also will come. But if high is greater than EMA and low is less than EMA, then the stocks which have touched 100 EMA, they will come in the screener.
Oh, yes. So the 40 days or 120 days, so you can keep it as EMA 120 also, or EMA 40. Is same thing.
EMA 40, EMA 120 will be different, and lowest low of 40 days, lowest low of 120 days will be different.
There will be slight difference, yes.
There will be big difference.
Or we can take it as I mean, say a simple moving average.
Even simple
Okay,
or
that,
EMA,
that will
both,
be quite
whatever
different.
it will be different, because if
It is
price is
in
moving like this,
got it.
EMA will be here, low will be here.
Yes. So there is one method that lows crossing lowest of the 120 days, you can screen few stocks among the 500, Nifty 500 or 750, whatever you want,
Yes, yes,
for accumulation schematic.
yes.
Okay.
Uh, I
The-
will
the-
open charting and we will discuss on that.
So this dilemma always remains that out of 500, how do you concentrate your weight?
Yes, so I will share the screen. Okay, is this visible? Charting screener.
Yes, sir.
Yeah. So this is a possible VCP screener which I have created.
Hmm.
You can take a screenshot of this. Screen background is white right now. Okay, so this is a screener which I have created. And here, what do we see? I have added multiple conditions. Daily low is greater than 200 moving average, 100 moving average, 50 moving average, and low is less than 20, but high is or close is greater than 20. That means today candle has touched this 20 moving average, but it has closed above 20 moving average. So this is the criteria, and daily close greater than daily open. So today's candle is bullish candle, green candle.
Hmm.
And this condition, daily low multiplied by daily volume greater than, this is 2 CR. If you
Hmm.
see, one, so this is 2 CR. What does this mean? So I don't need to add commas in this. It will not be appropriate. I don't know whether it will work or not, but you can do this without comma also. And I have added comma just to show it that it is 2 CR. Why 2 CR? Because if there is a uh, low multiplied by volume greater than 2 CR, that means liquidity is, the turnover is more than 2 CR on that day. So if turnover is more than 2 CR and I want to invest 2 lakh, 3 lakh, up to 20 lakhs, that will be 10%. VCP is volatility contraction pattern of Mark Minervini. So even if I want to invest 2 lakhs, 3 lakhs, it will be just 1% of day's volume, and I won't have any difficulty in buying. There will be small slippage if at all. And there are so many company names. There are 51 names which have done this today. These are the stocks. And if we bring our cursor here, we can easily see the chart. See, the chart is visible. The chart is small. We can zoom in, zoom out here itself. So it becomes handy. And these yellow vertical lines are the lines which show in past when similar thing has happened. So these are the past instances. From here we can see how many times it has been successful, how many times it has failed. So if we check here, It was a nice breakout like candle, but ultimately it went below the moving average, closed here, created a spring, and then went up. So, do you want to buy based on this parameter or not? That also you can decide based on these kind of screeners. So, build a screener based on your whatever is your condition. Build a screener. It is very easy to build a screener here, and you can get the chart like this. You can see the history of that chart, and it is free. You can log in free of cost. It's there is no cost involved, so it is very good, helpful information here. Now if we go to next chart, this is IPO stock. It has been recently launched. This is the date of 26th August. Now it is going higher and higher, and first time it has touched 20 moving average after this big rapid up move. Earlier there was this was the first instance when there was low less than 20 moving average closed above this and green candle. From there it has gone up very nicely. So from here you can see multiple stocks which have fulfilled that condition, and you can select easily from these stocks. So this is 197 Paytm, then we have 63 moons. You can go through these very easily, fast, and if you are good in eyeballing, you can just identify some good stocks and get that stock in your watch list. Now there are 50 stocks. If you want to get this list on TradingView, that is also possible. How to do it, I will tell you right now. See, there is a we can copy, export to CSV or export to Excel. So we can get it easily as a CSV file or Excel file. If we download CSV from here, what will happen? It will give a list of those stocks which have come fulfilled this criteria in last 9 months. So if I download this file, I will show you. Is this file visible?
Yes, sir.
Yeah. So somebody has asked about entry opportunity. We are not discussing about entry opportunity. I'm not telling you this is an entry opportunity. I'm just telling you how to screen the chart. And from that screener, if you have a specific entry criteria, then you will have to add those parameters and see if it fulfills your parameter, and then take the opportunity. Otherwise, just leave it. So this is a screener, and it has given us list from 1st of March. If we go to bottom, this is the latest date. So we can select the number of stocks which we want. Suppose we want just today's stocks. So we can select these stocks. There are 23 these are 51 stocks. Here I can just copy. Now this is the list which is ready-made list given by Chartink. I cannot add this list to TradingView. I will show you. If I add it to TradingView, what will happen. I will make create new list, and suppose I want to give it a name of pest. Okay, I will add here. What happens if I paste here? I have done Control V, and if I paste here, stocks are not coming here. There is one name which is red, and stock names are not appearing. So what I have to do is, I will show you. I have created easy way. So I have created this file in Excel. I have filled some formula in that, and if I paste the list, it creates a list which can be pasted in TradingView. Now I have copied this, and if I paste this list here, we'll get all 50 names, 51 names. See, the list is readily available here. I can see the list here, and then I can identify these stocks with my tape reading tool. I don't if I want to use my tape reading tool, I can very well use this. And here in this stock, if this is a buying area I want to buy here, I will use as I can use price alert here. I can add alert from this, or else I will go to my broker website or broker's app. I will add price alert on this stock. So adding a stock alert on broker platform is easy and it is free. TradingView can be, if you have paid subscription, then fine. Otherwise, it will be costly. Then see, the Coforge has come, but it has already given a buy opportunity and it has gone up. So if you have missed the discussion, I will add it later on. I am recording the session. Paytm has also given an opportunity here. The continuation was formed here. It gave entry. It has completed the target. So I'm not interested anymore in this stock. This stock 63 Moons Technologies has fulfilled the criteria, but it does not fulfill my criteria. I will wait for retracement entry. So if it comes here, I will keep a alert here, and at that time, if I feel it is good to add, I will buy. Now Skipper had given good opportunity to buy here. If some stock, so this is totally different screener, and I don't use the screener. Therefore, many stocks will show that entry has happened and now they are up. If some stock like this or bag, if it comes in my buying area, I can buy. But I have specific parameters also for that. If it is a first buying area, new buying area, after that it is coming down, giving me opportunity, then I will buy. Like somewhere here, Ganesh Housing. This is first green, then second green. If it comes in buying area, I will buy. And if it goes on to, if it keeps going higher and higher, then I will be able to make good profits. There can be a breakout also. I will not buy this for breakout. So there are multiple stocks and I can screen them. Okay. So this way I can easily identify the stocks which have uh, given the indication or which have fulfilled that criteria which we have used. Now there are some other conditions also which I have used, like this stock which is more than 5% down. So for this, what I do is, if we want to identify stocks which have closed less than 5% as compared to yesterday, this is the condition. What we are checking, I think stock 5% down today. Let me get the appropriate scan, then I will tell you. Yes, so this is the list of stocks which are more than 5% down today. If I don't want to check market cap, I will just hide this. If I want to check market cap, I will unhide it. So disable filter or enable filter. Now, if we see how many stocks have closed below 5%, today there are 14 stocks. Yesterday there were so many stocks, almost 400 stocks. And this I am checking in cash segment. So what we can check, I will create a filter and I will show. What will be the condition? Today's close. Okay. So we'll write daily close is, if we want to check fall, what we will select? Is it less than, greater than, equals? We'll select less than, and we'll select close 1 day ago. So we want to select the stocks which have fallen more than 5% as compared to yesterday close. So how will I get that kind of stock? I will multiply this by 0.9. 995 or 945. Sorry, 955. 955, 0.955 is 1 minus 0.955 will be 0.45. So it will show the stocks which have closed either 4.5% or lower. So see, this is the list minus 4.5% or higher. Means maximum fall here is 11%. Minimum fall in these stocks is minus 4.5% on closing basis. And this is the list of these stocks. Yesterday there were more than 800 stocks. Today the list is around 100, probably 67. So this is easy to identify number of stocks which have closed below less than 5%. Have you understood this formula?
Yes, sir.
So you should understand some basics of maths, and then it will be easy to create these kind of screeners. Now,
So
does
for,
anyone want to create any screener?
so for 10% it is 0.9.
Yes, for 10% it will be zero point 0.9. So I will make it 0.9 and run scan. So only three stocks. For 20% it will be zero point 0.8. Now if we want to see the stocks which have increased by 5%, what we'll do? We'll make it 1.05 or 1.0545%. There are some stocks which have 5% circuit, and we want to include those stocks also. So those 5% circuit stocks, usually they may close at 4.8, 4.7% also. Therefore I have kept it 4.5%. When we check this, minimum is 4.5% rise and maximum is 20%. There are so many stocks which have gone up more than 10%. Par drugs, and I have never heard names of these kind of stocks. So we can get these kind of names here also, and many new names will come here also. In this, if I want to identify only those stocks which have very good liquidity, what will I will do? I will enable this filter more than 200, 2000 CR. So when I enable this filter, the number reduces. See, there are only 64 stocks which have fulfilled this criteria. If I want to see the stocks which are not in 5% circuit limit, what I will do? I will use 1.06. So if the stock is able to move, or 1.051, if the stock is able to move more than 1.51%, 1.051 means 5.1%, then that stock is not in 5% limit. It is higher than that. So there are around 40 stocks which have closed. I want to see which have moved higher than that, not just closed. So I will make it daily high greater than 5.1%. In this, the list will increase. There are 135 stocks. So there are these 135 stocks which are not in 5% circuit limit, and they have moved more than 5% limit today. There will be many other stocks which have not moved more than 5%, but still they can be in 5% or higher limits. So if I want to identify only those stocks which have a limit of more than 10%, if I want to identify the stocks which are more than 10%, then I will use 1.10. So here we have 19 stocks which have moved more than 10% today. And I have not used close, I have used high. So if I want to see the stocks which have moved more than 10% during last 3 months, what I will do? Can anyone tell?
60 candle.
No. I will download this CSV. I will open this file. As we already have the list up to third month. So we have a big list. So for previous 3 months, if I want to see, I will go page up to 8th month. So maybe from 31st of July, I will copy this list and I will convert that list by pasting it here. Let me paste it here first. And there will be some common names also. So there are 700 names. So even if there are some common names, I'm not worried because we cannot add more than 1000 names at a time, but 700 is fine. So this is the list of 700 stocks. I'll copy this list and I will paste it in TradingView. So this is TradingView list. First, I will clear this list. If I paste this, see all the names have come here and the list will be as per date. So this stock had made 10% move here, August, 31st July. So 31st July is our starting date and this stock had made 10% move first time on this day. After that, it kept on moving higher and higher. Then this is another stock which made 10% move here. See the vertical line, it will stay here and I am shifting the day down. So with this, what can we understand? I will show you. See, decal had moved 10% in one day. Many people will look to buy this. After that, what happened? Prices went up slightly, but it did not go up significantly. But if we waited for this buying area, price came down in the buying area, and after that, it went up nicely. And it completed first target also, which will be highest close here. So it completed that target. So this way, we can understand that even though there is 10% move in the stock, it came down, it went up afterwards and gave us entry with good risk reward and target completed. So we don't need to panic when the stock is moving rapidly. We can leave that stock, just identify our chart or our stocks which fulfill our criteria and buy only when it comes to our buying area. So you can create your multiple strategies based on your indicators or your screeners. Suppose you have a strategy that you want to buy when stock has closed about 20-50 moving averages. You can create screener like this and see how the stock has behaved after that. Just go to specific day. For example, here we have list of so many stocks and so many days. Just select this list from here to here. On 1st of March, there were more than 40 stocks, 50 stocks. Let's see. On 1st March, there are 66 stocks which have fulfilled this parameter. So go to that list and then paste this. Add this to your list here and paste it here. Now, I will tell you one more thing. This ARE under and M, this stock name will not come in our uh, trading view. I will tell you the reason and I will tell you how to tackle this. So I have selected 65 stocks. I'll go to trading view. Am I going too fast? Are you able to understand these things which I am doing?
Yes, sir.
Yeah. Just paste here and when we see M and M fin, it is not is AR and M. It shows invalid symbol and this shows invalid symbol. So only these stocks where and is written, they will show invalid symbol. What we have to do is M underscore M. M underscore M and is replaced by underscore here in trading view. That is the only thing which we have to do and it will come here. Add ARE underscore M. So this will come here. Now the list is complete. So delete these two and our list is complete. Now just go to that day of first of I think first of March,
March.
right? So this is first March. On this day, it had moved more than 10%. After that, if somebody had bought it, what happened? Prices came down and it is still down. So if you buy here, you will get stuck. You can identify these kind of things. Just go through all the list on that day, what happened, and after that, what happened. So uh, March, this is first March. So this is list of first March. I will keep my cursor there, and on that day, this is the candle visible. After that, what happened is also visible. So in this manner, we can go through multiple charts, identify what happened in different stocks as per our parameters, and if the strategy will work or not, we can understand that. Okay.
So we have taken from 1st August, na?
I think we selected from first
Yeah, the
March.
last list was from March.
Okay, okay.
So rather than this way, I think that in the trading view there is
I think it is August. August 31st of 7. So 31st 7.
मार्च में लगाया था.
Yeah, but कुछ I think दूसरा लिस्ट सिलेक्ट हो गया. CCL Jaineco. This is different list. I think I
Hmm.
selected VCP list.
Hmm.
This is different list.
This one,
I
this list.
selected from different list because two lists are open. What I
Hmm.
will do is I will remove this, and this is also different list. I will remove this. Okay. Okay. So I will tell you how to make this list. I will tell you the formula also. Here, this is the formula. Can you see this? Equals B1, and this is the formula which I have written. So B1 means this. After that, added this row, and this is the result of that. B1 and A1. I have first NSE will come, after that, this will come, after that, this will come. And this way, whenever I enter stock name here, it will come in between these two, this and this. So, this I will just remove this and it will become normal. So whatever changes I have to do is I have to make change only in this, and I will get ready-made list here. I will share this file with you so that you don't have to work on this again. You don't have to write the formula again, but just don't change the formula and you will be able to make it. You can select whatever list you have downloaded. So how to download the list I will tell.
So
Here
here
we have
there is an
CSV
option.
Excel. Yes sir.
So in the same screen down below there is an option of number of months for back testing. From there only you can take. Yeah, here see 9 months.
Backtest history.
And
Yes,
it's
so
here.
this list shows multiple stock names.
Okay,
So
this
what
see.
we can do is suppose I select here, I click on this day. It will show the list of 20 September. So if I go to list of 20 September, from here I can check what happened on that day, on 20 September. So 20 September is here. August, September. So this is the candle of 20 September. We can see this list 20 September, and what happened after that also is visible. Okay. So this backtest is different backtest. Now from here we can go to backtest results again. If you want to download all the stock names, download from here. If you want to download just this list, you can download from here. If you click on CSV or Excel, the file is downloaded and it will have limited names. See, there are only 20 names. So if you download from here, it will show smaller list. I will check what happens on Excel. So Excel is also smaller. So when we download from here, either CSV or Excel, only this list will get downloaded. If we download from here, then whole 9-month list will get downloaded.
Instead of 9 months, we can change the number of months here.
Yes, we can change the number of months also.
Plus, okay.
But I think it is 9 months and larger.
Change to 9 months, yeah.
Yes. If you go to lower time frames, then the list will reduce. Then number of months will reduce. Okay, any questions in this?
Can we customize these columns here?
These columns?
Yes.
I don't think so. Since I have never tried.
Okay.
But there was no option also to customize this.
Hmm.
But there are so many parameters for scanning. You
Hmm.
can go and create any scanner. There are many fundamental parameters also. So if you want to create a scanner from the scratch, how can you do? See, there is screeners here. Click on create a scan. When you click on create scan, it will show this. There will be nothing. Then you can click here plus, and there are many filters here. There are hundreds of filters available, and these are either technical filters or fundamental filters. Both are available. I screen based on technical filters mainly, but you can select based on symbol name, industry, sector, market cap name, open, high, low, close. These are our technicals. Volume also can be screened, so you can identify the stocks which have created 5 times volume as compared to last 10 days, or highest volume in the month. You can create screeners based on volume. You can create screener based on percentage change, VWAP, whether price is above VWAP, below VWAP. Then Heikenashi screeners. I don't use Heikenashi, so I don't screen that. Then I don't know what is this buyer initiated, seller initiated. I don't use that. There are order books filled. So if you know how to use these, you can use them. Or else you can search on YouTube, and there will be many videos available on how to use these parameters. So if you have some specific parameter, you can use. Then these functions are very important: math function, bracket, minimum, max, greatest. So write the formula on paper, including the brackets, which part should go in bracket, which part should remain out of bracket, and you can create complex formulas also which can be used. First write the formula on paper and then keep on adding here. Adding here is simple. Creating the formula beforehand is required if it is not simple formula. Then this mean duration or max duration, this mean and max can be used to identify lowest of or highest of last few candles. I will show you. If I want to show the low is crossing, daily low is less than, then I want to see minimum. So I want to see the candles which have crossed minimum of 120 days. 120 days low. I want to see those stocks which have crossed minimum of 120 days, 1 day ago low, and then high should be greater. High is greater than. So I have just selected this. Here we have duplicate filter and changed this condition. Now this will show me the names of stocks which have crossed below the lowest low of last 120 days. Here we can see this stock has crossed below lowest low of 120 days. It is here. This is the lowest of last 120 days. It went below, and high is higher, low is lower above below this. Now this candle is excluded. Previous red candle is excluded. Why is it excluded? Because I have created a formula where I am using one day ago here as well as here. So if I use just this, then there are more names. There are different names. See? So by changing, making small changes, there will be some difference here. But usually I avoid previous candle just one day before to identify the low. Because I want to see the low before that, not just yesterday's low. So this is the candle where we can see these are the lows of previous 120 days, and probably there is a schematic and this has created a spring. So I can add this in my accumulation schematic, and I can look for opportunities in this, or else I can look for breakout above this. And if it closes above maybe 46 or 48, after that I can look for momentum entries like Mark Minervini. He does not buy when it is in downtrend. So from here stock has come down. So according to him, it is not a very strong stock. When this breaks out, after that, if there is a base formation, then he will go for VCP pattern. Here also the pattern is not VCP pattern, so he may not buy. But if I feel that this is good accumulation schematic after studying the stock, I can look for buying opportunities. So this is the way of creating 120 day low. Now if instead of this, if I change it to 40, then it will show me different stocks which are crossing 40 days low. So this is the stock which has crossed low of last 40 days. This is the last low of last 40 days. Lowest of last 40 days is here, and it has also crossed below this and created a spring like structure. So if I feel that this is a spring and I want to buy this, I can look for buying opportunities based on that principle. You can create multiple screeners, and this will be very helpful.
Can
Okay.
you give some example of say breakout? How can we go for this
For
JAC,
breakout screener,
JAC breakout in similar to spring that we are talking here?
yes. So what do we want to see? We want to look for a candle close which is greater than
Hmm.
max
Achha.
one day ago. Maximum, for suppose we want to look for 3 months. So if there is a 3 month breakout, this is the condition. We are looking for daily close which is greater than highest high, highest high of last 60 days, and
Okay.
checking from one day before. If you select today, then there may not be any name. See,
Hmm.
there is no name.
Instead
We
of one
have
day,
to select
take
because we want to compare this condition with yesterday or before that.
take or before. Okay.
So either it should come one day ago here, or it should come one day ago here.
Mm-hmm.
And there is this list of 24 stocks,
Which is
dynamic
broken.
cables.
Uh,
So this has closed above last 60 days high.
mm.
So last 60 days high will be up to this. This is
Mm.
not in the last 60 days. Therefore, it has not crossed this. Even after that, it has come in the screener. Therefore,
Mm.
we need to add our discretion. We need to see manually. These are not blind buys. We have to see properly. See this stock, it has closed above last 60 days high. It is closing above last 60 days high. This is also closing above last 60 days. This is also closing. This is closing above, yeah. This is also closing above all previous candles. So all these stocks are closing above this. Now if I want to add liquidity, what I will do? low multiplied by l- volume is greater than 2 CR. Okay. So how many names are there? There are 24 names. When I run this now, list is just 13. So my work is reduced. I don't need to watch those 11 stocks which may have low liquidity. I can just watch these stocks. Now see, there are those circuit stocks have been out. And what is the use of those stocks which if I am not able to monitor them and if I am not able to buy or take entry in them? Now there are many ETF names here. What I
Hmm.
can add is uh, market cap instead of market cap name, market cap. So market cap greater than, suppose you want to look only those stocks which are more than 500 market cap. So run this and list is just 6. So out of these 6 stocks, if you find something interesting, you can buy. Otherwise, just leave it.
It is
Right?
500.
Yeah, this 500 is market
500
cap of
crore.
more than 500 crores CR.
Crores. Uh-huh.
Yes. So 500 for market cap, it is CR.
Sir, in the
Okay.
liquidity, if we take only daily volume greater than 2 crores, then it will do instead of multiplying it with daily low.
So if we check daily volume greater than 2 CR, what will
Yes.
happen? Those stocks which have a price of 10,000 or suppose more than that, 15,000,
Hmm.
then 2 CR multiplied by 10,000, how much it will be?
Hmm.
So volume alone is useless. Suppose some stock is trading at 1 rupee,
Hmm.
then it will be okay. Means it will have 2 CR turnover. And most of the times, volume of 2 CR, I will show you what happens. Volume greater than 2 CR. Just one stock. There is a volume of more than 2 CR.
Hmm. And daily low
Now, if
multiplied
I
by.
hide this filter, let us see how many stocks have more than 2 CR volume. There are just 26 stocks which have more than 2 CR volume. If I hide this filter of market cap of 500, let us see. Just one more, 27. So overall, there are only 27 stocks which have more than 2 CR volume. And most of them must be uh, those kind of stocks which have low prices. So if we check price, highest price is 750.
Hmm.
So above that, we are not getting any stock. Just volume will not have any useful information, because to understand the liquidity, only volume will not be useful. What we want to know is the turnover. Instead of volume, we want to know the turnover, so that if we want to invest X amount, is it possible to invest that much amount with one click, or on one day is it possible to invest? That is the purpose of identifying liquidity. Okay, so we should end the session now.
Yes, sir. Thank you.
Yes, thank you everyone. I'll update the recording. I'll see. First, I will stop recording.
Hello.